author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters out there. Welcome. I'm your host, Steve Rhodes, and thanks for joining me this morning. I hope you're having a great Monday. I just couldn't wait to get here. Hope you had a fabulous weekend. I know I did, and folks, this is absolutely my favorite time of the day. There's nothing like being able to kick off things here for TFNN. And folks, we absolutely love you being here with us. Now, you can watch us on TigerTV. All you have to do is go to the homepage at TFNN.com, click on TigerTV. You'll be able to watch this show live. You can get the archive of the show on Channel 14. So maybe there's something here that we'll talk about today, maybe some lesson that we'll take a look at in a chart. And you can always go back, you can replay it, you can take a look at what we might be looking at on a chart, and then you can go ahead and do it on your chart. And the reason that you want to do that, folks, is simply just because 85% of what your brain processes is all visual. And that processes that whether you actually see it through your eyes or not. And we're all about visualization. I hope you had an absolutely fantastic weekend. I think one of the coolest things that I had the opportunity to do this weekend was to spend time with my oldest daughter, who came back from Florida State. And the reason is because, so much of what I like to be able to communicate to everyone out there that's listening in is just simply how to get yourself into a peak state and how to overcome the two primary fears that each of us face. Each of us face these in life. Those two fears are really simple. The first fear is not being loved, and the second fear is not being enough. And in her case, she had to deal with those, and still is, dealing with those fears in the sorority that she's at. I mean, she's been given this great gift with regard to, folks that want her to run for an office. She's afraid of possibly, offending a couple hundred girls. Those are false evidence of appearing real. That's all those fears are. Those the same fear that you and I have. And what I love is, look, I love to be able to touch people's lives. And hopefully I'm touching your life in some way. I know that you are, just simply by joining us here, by creating the energy that you've got here. And what I always like to be able to do is walk the walk and talk the walk. And there's no better way to do that than to do that with someone that you love. I love each of you out there. Certainly love my family, love my daughter, love the mere fact that she and I were able to have, a nice, what I'll call a deep conversation. So much of life is just lived on the periphery, if you will. It's all stuff, that comes in on the media. You don't know what to believe, what not to believe. When it comes to making money, when it comes to charting, we'll be able to show you what to believe and how to believe in yourself. Because if you don't believe in yourself, there's even some emails that I received from clients and others, just simply also dealing with their fears. And there's nothing like overcoming your fear. And the first place that you've got to come from is from a place of strength. So you got to put yourself in a peak state. If you're looking over my right shoulder, in a moment you're going to see my favorite place on the planet, which is in Lanai. There's an area there that absolutely puts me into a peak state. Well, I guess, we can, maybe we've got it up somewhere up on the screen here that you can take a look at. And you need to find your place of strength as well. And why do you need to do that, folks? Look, if you're joining right now, you've got the futures are pretty much flat. The Dow's down 18, the S&P is down about 2, NASDAQ down a couple. If you go around the world, you've got the DAX has been up, down, all around. It's up 18 points right now. And we'll go take a look at what's going on in the markets. But what's more important, quite frankly, in the markets, especially when you don't have a lot out there, is simply what it is that you need to do to play the money game. And I always like to talk about that because I think that from my standpoint, never in life has there been more of an opportunity to be able to do something with yourself. It's incredible, the opportunity, the access to information, the access to technology, the access to be able to help you learn a language, a charting language. It's like, learning a foreign language, if you will, only a lot easier. And what's cool about it, you're dealing with nothing but a whole set of emotions that continue to play over and over and over again. And all you've got to do, folks, to start to understand the money game, you've got to understand your potential. You've got to understand what action is you've got to take. You've got to understand what the results are, what type of belief system you've got to show up with, and what's the best way for you to be able to play that game. We always talk about why aren't more people wealthy than they are. And, you know, and most of it is simply because you don't define wealth. And here at TFNN, or at least as far as I'm concerned, wealth is simply defined as your investment capital, being able to go ahead and take care of all of your monthly expenses. And if that seems unachievable, then you go ahead and you back things down, because, folks, in order for you to attain anything, it's got to be believable and it's got to be achievable. So in your life, wherever it is that you're at, many folks that are listening have already attained financial freedom. Some of those folks some listeners just want to be able to get there. Some would like to just simply be able to take care of a house payment, a car payment, a college payment, whatever that might be, and you want to be able to learn how to get your investment capital to work for you. That's what we're going to teach you here. And some of the, we talked a little bit about last week about businesses. I'm a serial entrepreneur. There's no question about that. If you go back and you take a look at my life, I take a look at one of the other reasons why people don't make it in the money business, or they're not wealthy, is simply that they don't make making profits a must. But the key, folks, is when you're going to make profits a must in the trading business or in any business, it can't be done over a period of a week, 2 weeks, a month. What we have set up inside our system, and what I suggest you set up inside your system, is a period of 12 months. From whatever the time period is that you decide that you're going to start trading, or whatever trading system it is, or whatever newsletter you might subscribe to, whatever it might be that you do, folks, you've got to take a look at things over a 12-month period of time. All businesses, look, I used to be a fundamental investor, and as a fundamental investor, you've got things broken down into quarters. We see that with regard to releases of numbers, and you see cycles. Things are cycles. You've got to take a look at this as a business. You've got to take a look at it over a 12-month period of time, and you've got to believe that you can achieve. You've got to understand that potential. You've got to understand that you can believe, and there's a lot of folks that don't believe that they can achieve wealth. Why is that? It's typically, though, back to those two fears. Your fear of loss, your fear of not being loved, same thing, and your fear of not being enough. If you're here listening, if you are listening, or you know somebody that is dealing with that stuff, have them tune in here, because if you're here, folks, you absolutely are enough. And there's no way that here at TFNN that we could love you anymore. I mean, we absolutely love being here with you. I know I do, and we love being able to help others. That's really the place where we live from. There's 6 human needs, and I'm not going to go into those right now, but the 2 of those 6 human needs are contribution and contribution and geez, I've just had a little brain explosion there, and growth. Thank you. Thank you. You helped me there. So contribution and growth. And, at TFNN, that's really what it is that we live for. We live to be able to contribute to you. We live to be able to help you grow. And I know that's true of Tom. I know that's true of David. I know that's true of Larry. I know that's true of Basil. Each of the contributors here, are living in those 2 areas. Those are the 2 highest levels that you could ever possibly get to. I want you to be able to get to a period of growth and a period of contribution. And, another reason that folks don't accumulate, or why they aren't wealthy, is just simply they give up when they face challenges. When I take a look at what I was working with my daughter over the weekend, it was absolutely a challenge. The challenge for her was, if she goes and she accepts this position, and she can have any position that she wants within inside the sorority, if she goes ahead and accepts that position, or she doesn't, she'd be giving up. She would be, in my opinion, she would be giving up as she's facing the challenge of overcoming her fears. And I don't want you to give up, folks. You can't give up. You've got to have pig-headed determination, if you will, that you can believe, that you can achieve. And, and a lot of times what that needs, and it's a really perfect example, and what I loved most about this weekend was actually being able to coach her. When you really talk about it, when you really think about what it is that I try to, what I am accomplishing with my newsletter service, what I am accomplishing with the radio shows that we do here, it's really about coaching. It's absolutely about coaching, and I love this weekend to be able to walk the walk, if you will, and be able to do that with obviously somebody that is so important to me in my life. Now, we talk about business. I was talking about Henry Ford, last week, and how he started, he failed this first 2 times. He didn't give up. First time he went bankrupt. The second time he sold his business to Cadillac. The 3rd time was the charm, folks. You can't give up. And if he had failed the 3rd time, do you think Henry Ford would have gone on? Absolutely. If Henry Ford hadn't succeeded, if he hadn't decided to not give up, our lives likely would have been impacted. The same, you can say that with a number of people. Right now, today, people, take a look at Steve Jobs. He didn't give up. And I don't want you to ever give up. When it comes to your trading, I don't want you to give up. And the odds are stacked against you. You realize that 80% of all businesses fail in the first year. I mean, you see that go on around you. 92% of those businesses, they fail by 5 years. That means only 8% of businesses actually succeed. You've got to run this like a business. Remember, I was talking about why aren't more people wealthy? Well, you've got to be able to run this like a business. And so those odds possibly are stacked up against you. 4%. That's 1 out of 25 actually make it to year 10. Now, I'm fortunate. The businesses that I've been involved with, all were around for more than 10 years. In some cases, I partook in them. One I've sold or what have you, but all been around for more than 10 years, and I've done it more than one time, more than 2 times, more than 3 times. And folks, this here, what we're all about here at TFNN is making sure that we help you to be around for 10 years trading or more. And the reason that you do that, the reason that you tune in here, is because statistically, 92% of franchises, if you own a business and you own a franchise, you're going to succeed. You're going to make it to year 10. 92%. And at TFNN, what we are absolutely building, what we have here is a franchise. You take a look at today's lineup. You've got myself, then you've got Tom and myself, then you got Basil Chapman from 11 to 12, Larry Pesavento, David White, and then Tom to take us home from 4 to 6. Tomorrow we've got Don Kaufman or Victor, doing the options hour. You've got Ken Shreve. You talk about a franchise of talent, a franchise of individual thought, a franchise of people that are coming from the area of growth and contribution. That's why you want to tune in here, which you are. That's why you want to go ahead and overcome your fears. That's why you want to go ahead and take advantage of any services that we absolutely have here, because you want to get in on the wealth game, folks. You absolutely do. You're at the franchise. If you are looking to take yourself, to the next level, if you will, because we've all got another gear. You're here. We're glad you're here. When we come back, we'll go take a tour around the markets. We'll see what's going on. Right now, you got the Dow futures down 23. We'll be right back, folks. Thanks for joining us.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Are
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details. This segment is brought to you by TFNN. Don't forget, you can test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Let's go to our first caller, John from Quincy, Mass. John, thanks so much for calling.
Hi, Steve. How are you today?
I'm doing great. Yourself?
Oh, fine, thanks.
How was your weekend up? How's your weekend?
Pretty good.
Yeah. Now I hear that people up in the Northeast are still without power.
Well, I'm in Quincy, and I don't know anyone without power here, but I think more in the suburbs, yeah.
Yeah. Man, that's amazing. That's been a week, hasn't it?
Yeah.
Jeez. Oh boy. How's the weather up there then to be without power? I mean,
well, the weather's pretty mild now. It's in the 60s during the day, so
okay.
Not too bad.
Okay, good. You're taking a look at the DUG, the DUG?
Yeah.
Yeah. What are you looking at here? Are you in the trade? Looking to get in the trade? What's your take?
Yeah, I'm in the trade. I thought oil had tested its highs at last week a little on lighter volume and came down, but now it's back up there.
Yeah.
And so.
Okay. So the DUG, folks, now that's the inverse ETF for the really for the energy sector. So you'd want to go take a look at the XLE, and I'm pretty sure that that ExxonMobil is the largest piece of that. There's probably
I think it's the Dow Jones Oil and Gas Index. It's a double reverse on that.
Yeah. And so if you take a look at the XLE, which I've got up on my screen first here, Doug, one of the things, because I was actually looking at this trade last week as well, and I went ahead and took it off of our list on Friday morning, I believe that is. And and what you've got on the XLE first, you've got this nice little down move that it made on November the 1st. You came down with 41 million shares. Now let's take a look. If you just take a look at from the October 4th lows, just for the heck of that, from the October 4th lows to the high that we had on the 28th. Now the bad side of that is that it's only done about a 0.382 retracement on the downside. So but it came down with some volume. Absolutely came down with volume. What I don't like is that right now on the XLE, and that's what I would be taking a look at here, Doug, and you'll be looking for the test. I would think you'll see that test today. And you're looking at the candle from October 28th. And there's 17 million shares there. Now, when you came off of those lows from November 1st, when you take a look at the, as you were trying to come back into that candle on November 3rd, which was Thursday, you actually came into that with 19 million shares. That was 19 million shares going into 17 million shares. That was the reason that I went ahead and took the trade-off for my subscribers on this on Friday morning, because the low on that 28th candle there is 71.60. We didn't get all the way up into it on Thursday. You only got to a high of 71.56. Those 4 pennies made all the difference in the world, because the question was, is it just trying to recharge its battery if you will, to go ahead and get up there. And what we did on Friday was we just simply had a sideways move. You know, it didn't move up or down, didn't test either the top or the bottom on 12 million shares, so it didn't give us any type of signal. And if I take a look at the Doug right now, you know, in pre-market, it's trading out at just about where it closed. The last trade looks like that's in at about 40.95. So it's actually, let me see here. Am I looking at the right thing? Nope, 26.15. You know, and it closed at 26.17. So you're not even getting any type of information on this in the pre-market. So now if I go ahead and I pull up the Doug here for you, give me a second to do that. On the Doug, the first question would be, do you have a stop in?
No.
No. Okay. So we got to do that because we got to protect your investment capital. So if you're taking a look at the DUG, you know what I was looking for it to retrace to the 0.786 area, which it did. That 0.786 was 26.04. It got down to 26.06 on Thursday. Got down to 26.07 on Friday. You know, I don't have my my position size calculator up right now. I'll do that when I go to the break, and if I see something different, I'll go ahead and announce that to you, you know, on the air since you're listening. But I would look to have a stop somewhere underneath 24.96. When did you get into it? When did you get into the trade?
Maybe I think it was last Thursday.
Last Thursday, okay. So you know, you want to have a stop, a physical stop, somewhere underneath 24.96. But I'll take a look at what the average day's true range is on that, you know, and let you know about that trade. And you know, if you've got this one here, I don't have any type of feel. This isn't given enough information yet. You know, but I think that we'll get some type of information on this today, and you're definitely going to want to pay attention to what's going on, you know, with ExxonMobil. ExxonMobil had a nice downdraft on the 31st. You came down with 30 million shares, then the following day with 35 million shares, you went up with 21, you went up with 24, and these are the reasons why I got into the trade. So all I want you to be able to do is use the right money management so that you don't let this thing get away from you, okay?
Okay, thanks a lot.
Okay, John. Thanks for calling 877-927-6648. When we get back, we'll go take a look at these markets, see how they open up.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
Homeowners, did you know a burglar could break into your home and get away in just 5 minutes? A locked door may not be enough to keep a thief out of your home. Think about what you can lose, and then think about this. Now you can get a free security system monitored by ADT, the leader in home security. Pick up your phone now and get free hardware, free medical and fire alert, and free activation. It's an $850 value. Just call Protect Your Home, your authorized ADT dealer, at 1-800-949-8207. You'll get 24-hour protection, and there's no cost for parts or activation. So call now about a free security system monitored by ADT. Call 1-800-949-8207. $99 installation charge. 36-month monitoring agreement at $35.99 a month. Call for terms and conditions to this offer and protect your home license numbers. Call now. 1-800-949-8207. That's 1-800-949-8207.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to TFNN.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Thanks so much for joining us. And we've got the markets are open, and we are off to the races. You've got the Dow just up a point. You've got the composite pretty much flat, down a point. You've got the S&Ps. Really everything is basically flat. I would say, are the markets even open? I don't see anything going on. So let's go back and let's go take a look at. Let's dive a little bit deeper. For Doug, for John. I'm sorry, for Doug. Doug was what we're looking at. For John from Quincy. So. I've got the 10-minute chart up, and so, we're trading right now, so we're watching live exactly what's going on out here. And what I want you to take a look at, John, is first there's an ABC pattern that is completing really just right about now. And that ABC pattern would take, on the 10-minute chart, would take the DUG down to 2572. Now, what I'm also looking at, I'm going down, so there's really a couple things that I've got drawn here on the chart. The first is the retracement level, going down from the low of 2496. Which we mentioned. I mentioned that, what John should do is have a stop underneath that because that's a swing point, and all the way up to the high of $30. So when we take a look at that range there, what we're looking at is we're trying to find really the 3 primary Fibonacci numbers that you look at, 382, 618, and 786. So you just simply want to draw those on the screen. Then you next want to go see what kind of patterns are out there, because what you're really looking for are Gartley buy or Gartley sell patterns. In this case here, on the DUG, you'd be looking for a Gartley buy pattern. Well, what you've got, and you're always looking to be within a certain range. You're not looking for things to be exact. In this case here, we have an A to B equals C to D that completes at the price of 2572. You have a 0.786 area that completes at 2604. So you're right inside that range. Now, what I like to do is let the A to B equal C to D. Now, in this case here, part of the problem with this trade, or part of the risk on this trade, is if you go from the A point down to the B point, what you'll see is that the retracement that it did was only 0.382. And oftentimes when you do more than a 0.382 retracement, you'll do more than a 1-to-1 A to B equals C to D. But when you're trading a vehicle like this, when you're trading an ETF like this, what you want to do is you want to go over to the, and the easiest thing to do is, I think the Doug is a ProShare. And you can go over to the ProShare and you can find out exactly what the holdings are, what the makeup of the holdings, what the weighting is inside that structure the night before. If you can't do it on the Doug, you can off of the XLE, and that's really what it trades off of. There might be a little bit of differences, but But that's what you want to do. Or in the case of ProShares, you can go to the DIG, the opposite. I think that they have it for one and not the other. And I think what you'll find is you'll see that ExxonMobil is number one. Chevron might be number 2. And you want to take a look at what's going inside both of those. What kind of patterns are those completing? Now, in this case here, from the opening, what we can see here is you can see that just even on the 10-minute chart, when we start comparing bars on the 10-minute chart, what you can see is that we're coming into that AB equals CD, or a 2572, and you're doing it with a pretty decent bar, if you will, compared to the other ones. You know, we'd call that a long-range bar, a wide-range bar, which tells you to be caution. So that's on the 10-minute. You've got to be cautious there. Now, what do you have going for you? Well, what you have going for you, what I was looking at on the 10-minute chart, is going back to the volume candle from 12:10 in the afternoon on October 27th. And what you'll see is you had 329,000 shares on the DUG. Now, the low on that was 25.75. The high is 25.90. You're trading at 25.64 right now. So what you want to be able to see, John, is you want to be able to see a rejection. You know, that's an area where there should be some type of support here. If there's no support, then I say that fish is gone, if you will. And doesn't have to support it right here. You know, can wait to see if you already had that position and you weren't nervous or what have you, were trying to accumulate some position in there, you'd actually want to go ahead and maybe buy some lower price stock. So, but that person, that firm, that whoever it is that's out there, if they're going to go ahead and support it, they're going to do it right around this level. So you want to have a stop in underneath that 24.96. If you go over to your home page, you should be able to see the position size. Calculator webinar, go do that. The average true range on this trade here on the DUG is $1.51. So it could go up or down $1.51 a day. We'll be right back, folks.
Give the gift of silver this holiday season. TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how. At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
Welcome back, folks. Thanks for joining me. I'm Steve Rhodes, and thank you so much for being here. I want you to stay tuned because following this show, you've got Tom and I doing the Money Masters. Then we got Basil Chapman, Larry Pesavento. What a great lineup for us today. And then coming back at 3 to 4, you've got David White and then Tom taking it home from there. Now, you got the Dow right now is up 31 points, the composite up 2, S&P's up 3, and really a pretty good comeback considering that about 3 or 4 in the morning, you had the Dow future were down about, 100 and something, and the S&P was down maybe 13, 14 points. Now, one of the emails that I got over the weekend, you can always send me an email. Love to get emails from our listeners, subscribers, clients. And you can always send me an email, steve@tfnn.com. One of the emails that came in over the weekend was asking me to just maybe comment about, sentiment indexes. Now, there's a sentiment index that I occasionally go take a look at. It's the National Association of Investment Managers, NAAIM. Any of you can go over to that website, and you can take a look at the same graph, the same chart that I've got here. Now, I featured this in one of my newsletters that I do for my subscribers. Over the weekend, many times I'll do a little bit of a larger one and just take a look at what's going on, out inside the market. So I did this back maybe about a month ago or so. Time just absolutely flies. 2 to 3 weeks ago, 4 weeks ago. And what I was pointing out, hopefully you're watching this on Tiger TV, and I know it's hard to read the charts, but when you take a look, this is a survey of investment managers. The surveys have to begin, I think it's by Tuesday or Wednesday, and they can, go from, I think there's about 5 different categories from, 200% bearish, 200% bullish, and everything in between. And this has been going on since 2006. So the graph that you're looking at here on my screen is from 2006. Now, 3 times during this time period, the sentiment here turned to negative. You can see, and what I've got marked on my chart here, and what you want to do is mark these dates down, because if you want to take a look at, is sentiment good at being able to pick out a bottom? Or is sentiment good at being able to pick out a top? In this case here was really looking at it from a bottom standpoint. So there's 3 dates where this entire group of national, of investment managers, the reading on their sentiment index came in as negative. The first date was August 29th, 2007, 8/29/2007. So this is on a weekly basis, not that specific day. And you want to go ahead and write that down. The next was October 8th of 2008. And then the third time was this October 5th, 2011, which is when I went ahead and did the newsletter, to show that. So the question is there a correlation between negative sentiment, and is that a time when you can say that a bottom is put in? Why is it important about October 5th? Because right now, our biggest move, if you will, had the best month of October, I think, ever. Of course, that's all relative, right? That's after coming down off of a waterfall from July, if you will. And then what are they comparing, October to? But the bottom line was October 4th, we put in a significant low, at least at this point in time. And the negative sentiment here, during that same week, happened to be the 3rd time that it was that it had gone negative. So let's go back. I always like to the whole idea of mastering probability is not to believe what it is that you actually are fed, what it is that you actually see, but go back and test it and do the work. And that's what I do, for my clients so that we can identify and put together the best probable trade. So if we go back and we took a look at those days, again, the first one, I've got a weekly chart up on my screen, being the week ended August 31st, 2007. So you can see here where I've got that drawn on my chart, or go over to your chart and take a look at it. And is that when we put in a low? Absolutely not. Did we put in a low for a period of 4 weeks? We did. In fact, the high was made on October the 12th. So it was, so how many weeks there? You get 1, 2, 3, 4, 5, 6 weeks. 6 weeks later was the actual high in the market on the S&P. And when that area, that negative sentiment got broke really during the November 2007 time frame. Went back up a little bit higher, and then, you never saw that. So did that put in a significant low in the market? I think not. How about the next time? The next time was that week of October 8th, 2008. And if you go ahead, you can take a look on my chart here. I've got my cursor on that candle. Was that the low that was put in? Absolutely not. It certainly was. In fact, the market went down, continued to go down from there. You had, a couple weeks later where you went up, you opened up, and you closed all the way down. That was the week there, folks, of October 10, 2008. Talk about some volatility during that week, just like the volatility that we have going on right now. And so that didn't mark a low. So if those two areas didn't mark a low, and that had produced in thought what the negative sentiment was, and you were going to go play a counter trend, you're going to say, okay, that's when we put in a low. And we now know that this is the third time, that the week of October 4th, if you will, was the last time that we put in here. And we know in our October 4th area here, we've got a significant volume there. If we go take a look at any ETF, if you could go take a look at almost any stock out there, what you're going to see is a current pattern. So my question to you is based on that, and are you going to let two occurrences, be enough of a sample size? No, you really can't. But do you want to learn from those two experiences? If we do learn from those two experiences, the last time that came in, that wasn't the low for the period. So then what else do you take a look at? Well, you certainly want to go back and you want to be cognizant of that P-index date that happened on October 26. You want to understand that we had a very powerful planetary index date that was coupled with a fuse switch, if you will, which was the new moon at perigee. And, unless those highs are taken out convincingly, those may be the same patterns that we're seeing here that are unfolding with regard to what's going on in this marketplace, just as they did back in 2007, just as they did back in 2008, and now is 2010's time frame. This, folks, could easily be nothing more than just simply a nice bear market bounce. So from my standpoint, and you trade what your beliefs are. And that's the same thing that you do, the same thing that each of us do. But you want to go ahead, and that's the beliefs are nothing more than what that National, Association of Investment Managers, that's their sentiment, right? That's their beliefs. And people trade their beliefs. So be cautious. You want to be cautious because when that October 4th area gets taken out, well, then you could go, if it does get taken out, well, folks, if you go back and take a look at the last time, we saw much more significant lows that were coming in here. And having these high volume lows, folks, that's not necessarily such a good thing, because high volume lows end up getting tested. I know there was a question that came in on Tom's show about the cyclical, about the 6-month cyclical aspect. Sell in May, come back in November, and we come back, we'll go take a look at that, or if there's a caller, we'll go take a look at your stock, your ETF, your currency, whatever you want to take a look at. 877-927-6648. You got the Dow at 52, S&P's up 4, small caps are flat. We'll be right back, folks.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, before December 31st from your local Barnes & Noble store. And you will be given access to not just one, but 2 exceptional archived courses. Tiger Scaling, The Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Go long, America! Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Before December 31st, you will receive in excess of $300 in trading education.
Welcome back, folks. 877-927-6648. You know, let's see if I can maybe teach you something here in the next 4 minutes that we've got before we move on to the next show, the Money Masters show. What I've got up on my screen is the Euro-US dollar currency pair, and I've got it on a 30-minute time frame chart. So hopefully you're watching this on TigerTV, or you're able to follow along on your own chart. Now, we talk about retracement numbers, those levels being 382, 618, 786. There's also expansion numbers that you want to take a look at. There's 2 that you want to primarily focus in on. 1.272, 1.618. You also love to see a 2.618 because that's when that rubber band has really been wound up there, and you will typically see a change in trend taking place at that swing point. Now, those are measurement tools. That happens to be our ruler, just like you might have a yardstick in your home, and they're measurements between swing points. Swing points are just simply where you've got a turn in the market, a definite trend change. And on the 30-minute chart here that we're looking at, you can see that there was a definite trend change that came in at 11 o'clock on November the 4th. Put in a low there, the euro was down somewhere around the 137.10 area, and the next trend change came at about 6:30 in the evening on November 6th. You can see right up here where you made a high. Now, the measurement of that from that low to that high, if you multiply that times 1.272, that would take it to the low that was made at 5:30 this morning. Now, what you want to be able to do is you want to be able to put together these expansions between swing points or contractions between swing points. You want to be able to put those together with candle formations, because when you can do that, what you've got is you've got some real power, or you've got some probability on your side with regard to where to enter a trade, where to have your stop. Now, in this case here, what was nice about this trade is, I'll zoom in on a little bit more, is the candle that it made at that stage is what we call a hammer candle. And a hammer candle, you can see in this case here, you had a huge wick. A hammer candle can only be made at a bottom. The market has to be moving down into it. In this case here, that's what was going on with the euro. You know, the euro's been all over the place this morning, and all it's doing is breathing. Sometimes it's breathing heavily, but it's breathing and it's giving us an indication. These patterns, they continue to repeat. They play out with each other. So you had that nice hammer candle, which tells you that the bulls in that half-an-hour period came back and gained control. Oftentimes, what you want to do is you'd like to really put the odds of success from a money management standpoint on your side by being able to trade somewhere around 50% of that wick area. Now, in this case here, you know, and oftentimes in currencies, the way that they move, they won't let you do that. And so you've got to determine, you know, the right risk-reward strategy. And I absolutely want to teach you that. You should really go to your homepage of TFNN, and you should watch that position size calculator website, because it'll really talk about the three primary areas of money management that you've got to focus on: how much to risk, what your stop should be, and then how to determine your position size. And it works in currency just as it does in any ETF or stock. Now, what you've got here is you've got an ABC pattern that's underway. And that ABC pattern starts at the bottom of that hammer all the way up to the top at 6:30, the high that it made there, down to the low that it made at 9 a.m. And what you've got is at 138.26 on the euro is where that ABC would complete. Well, what else do you have going on there? Well, that's where you want to go ahead and take your retracement ruler. In this case here, I'm going from the 9 o'clock time frame that occurred. Let's go back and see when that date was. That was on the 4th, all the way down to the low that we made this morning, and voila. You've got a 0.786 retracement right there. That's setting up a Gartley sell pattern. And when you have a Gartley sell pattern, it's real easy. If that Gartley sell pattern fails, folks, then this thing will go on, and this will create a butterfly expansion. Just like you had an expansion to the bottom, you would have an expansion up to the top. And so what you'd want to be doing if you were trading this is you'd want to see what kind of candle is coming in right at that level. And what you can also see here on my screen is where that butterfly, or this Gartley here, you've also got a 1.618. So you got a 786, a 1.618, a completion of an ABC. That is a beautiful looking Gartley sell pattern. Folks, thanks for joining me. Stay tuned. You got Tom and I. We'll be back in about 8 minutes. Love being here with you. And we'll see you in just a few.